Striking off a company means legally removing the name of the company from the register of companies maintained by the Ministry of Corporate Affairs. Once a company is struck off, it ceases to exist as a legal entity. This process is generally used when a company is not carrying on any business operations and wants to close down voluntarily. In this video, we will understand the complete step-by-step procedure for striking off a company in a simple and detailed manner. Step 1. Check eligibility for strike-off. Before applying for strike-off, it is important to check whether the company is eligible. A company can apply for strike-off if it has not commenced any business since incorporation or has not carried on any business for the last 2 financial years and has not applied for dormant status. However, a company is not eligible if it has any ongoing business activity, pending liabilities, or legal proceedings. The company should not have any outstanding dues towards creditors, banks, or government authorities. Step 2. Close all liabilities. The next step is to ensure that all liabilities of the company are completely settled. This includes paying off all creditors, clearing bank loans, settling statutory dues such as GST, income tax, and other government liabilities. The company must also close all its bank accounts before applying for strike-off. Step 3. Prepare financial statements. The company must prepare its latest financial statements up to the date of closure. These financial statements should reflect that the company has no assets and no liabilities. A statement of accounts must be certified by a chartered accountant and should not be older than 30 days from the date of filing the application. Step 4. Convene board meeting. A board meeting must be conducted to approve the proposal for striking off the company. In this meeting, the directors pass a resolution approving the strike-off and authorize a director to make the application to the Registrar of Companies. Step 5. Obtain shareholders' approval. After the board meeting, the approval of shareholders must be obtained. A special resolution must be passed by the shareholders or consent must be obtained from at least 75% of the shareholders in terms of paid-up share capital. This approval confirms that the owners of the company agree to close the company. Step 6. File Form STK-2 with MCA. The next step is to file Form STK-2 on the MCA portal. This is the main application form for strike-off. It must be digitally signed by a director and certified by a practicing professional such as a chartered accountant, company secretary, or cost accountant. Step 7. Attach required documents. While filing Form STK-2, the following documents must be attached. An indemnity bond in Form STK-3 must be provided by all directors. An affidavit in Form STK-4 must be submitted by all directors confirming that the company has no liabilities. A statement of accounts certified by a chartered accountant must be attached. A copy of the special resolution or consent of shareholders must also be attached. Step 8. Payment of government fees. After uploading the form and documents, the prescribed government fee must be paid. Currently, the fee for filing Form STK-2 is 10,000 rupees. Step 9. Verification by Registrar of Companies. Once the application is submitted, the Registrar of Companies will examine the form and documents. If required, the Registrar may ask for additional information or clarification. The Registrar will also publish a public notice and give an opportunity to stakeholders to raise objections, if any. Step 10. Strike-off and dissolution of company. If no objections are received and the Registrar is satisfied, the name of the company will be struck off from the Register of Companies. A notice of strike-off will be published in the Official Gazette. From the date of publication, the company is considered dissolved and ceases to exist as a legal entity.